Hi there. It's time to look at the ChainLink through the Wyckoff lens to see where it is at and where it is heading. So after a couple of sessions, my tongue is a bit tied, so sorry about that. If you're new to my sessions, these are the three key things I'll cover in my session. So let's start with the weekly chart of ChainLink. Last week we discussed about whether basically it has entered the accumulation cycle, but whether or not it is going to show the selling climax above this yellow dashed line. Alright, why this yellow line? It's a line that's formed from the spring back in 2023 June, and then through the selling climax August 2024 and subsequently April this year, plus the second test as well. All these lows stayed above this trend line. Only on October 10th that it broke below the line. As of this moment, the battle is clearly around this line. You see it has been tested, the wick has went below the line, but then there were quite a bit of buying from that point, pushing the price above the line. So if this line is broken, that means the next we can take reference is probably somewhere near $9.9. That's where the selling climax closed back in August last year. Alright, and also a point where near 9.9 was tested during the selling climax in April, like 7 months ago. Okay, that's the first level of support before it comes to test the center line of the long-term playground zone. That's sitting around $8.20. That's where October 10th tested it. The selling climax back in August last year tested it, and it's also the resistance of the 2002-2003 sign of strengths. Okay, so this is a pretty strong reference level at around $8.2. Alright, so what we are looking to see is where the selling climax is going to end up at. Alright, if the bulls successfully, or whoever the diamond hands of ChainLink are supporting the price to stay above this yellow dash line, that's where it's going to end up at. However, selling climax again is or may not be the lowest point during an accumulation. We hope that it is, but looking at what we have here for ChainLink and multiple other charts for altcoins, we know that a lot of times that's not the case. Selling climax is just the initial spot that people are taking a breath, just like with sprints. After 100 meters or even 60 or maybe 200, depending on your physique, we'll take a pause and then take a few deep breaths and then jog a bit, and then the shakes come before the actual distribution reappear. Alright, so that's the thing here. We're trying to see is this trend line going to stay, and also whether this white trend line is going to continue. This is the lower peaks trend line. Okay, that started from this upthrust of the distribution back in May 2021 through the two buying climaxes back in December last year and August this year. So I'm saying ChainLink may be going through a gigantic wedge that lasted for 4 years, and we're edging towards closer to the tip. So if this yellow line is broken, meaning the price comes back to the center line of the long-term playground zone like we discussed, then this does not exist. And then that turns to my biggest worry for a couple of altcoins is that are they actually showing declining peaks? Meaning, maybe even though the market cap of crypto has gone higher than the past, the money has gone to some other projects, or Bitcoin has taken a large chunk of it, that the peaks or the buying climaxes of these projects are getting lower and lower along with time. Okay, so it's a trend line for diminishing return. Okay, we can remove this tag. So that's the big picture. Let's get to the daily and see what it's telling us. So last week we already were asking the question, where is the selling climax going to end, and when the automatic rally is going to appear after the selling climax. So usually after selling climax, there's a leg upwards. That's what we call automatic rally. As of now, when the price reached this yellow dash line of around $11.60, that's where the second test was back in June. And also the selling climax got to this, close to this level as well back in March. So that's why we see this wick coming from that line, people buying in from that level. And look at the volume increasing. I would say yesterday wasn't very encouraging because it's pretty much a lot of selling when the price tried to go up. The bulls try to make the price stay above this red key level of $13.10, but obviously after 4 days, they failed. And then now they're trying to defend this yellow dash line. And if this downtrend continues, okay, and like eventually show us where the selling climax would actually be, because the second test back in April this year went to as low as close to $10. We're still $2.18 from that level. So while this provides intermediate support, this may not be the end of the drop. And just in 2024 summer, in August time, that it went all the way to $8.30. The same level where October 10th tested. Okay, so as long as this continues to trade at the weaker side of the channel, like the bottom side of the channel instead of the stronger side, which means it may have the chance to break outside of the channel, or higher chance to break outside of the channel, let's put it this way. If crazily good news happen, it can break straight from the weaker side, but you have to imagine something opposite to that of the October 10th tariff. Alright, so if this trend continues towards the south, let me zoom out and quickly take a look if I have okay, it looks intact. I haven't screwed up anything. Extend the center line as well. So if this continues, it will eventually get to this white dash line near mid-December. So what I'm saying is, if the price continues to trade at the along the lower half of this box, even below the yellow dash line, sometime near mid-December, it will hit the white dash line. Okay, assuming it doesn't bounce above this center line. Look at what happened since mid-October. It challenged the center line, but never really stay long enough to challenge the ceiling. Alright, if this trend continues, that's where it's going to get to. So let's hope that it's going to finish the decline when it gets between the yellow and the white dash line, and then start trading sideways towards the stronger side of the channel. And then by that time, somewhere near the end of January or early February, that's where the chance of breaking outside of the channel comes in. Getting higher and higher chance for that to happen. But obviously, if you are already in it, you would hope that the price stays above the yellow and choose to break near the end of this year, or right at the beginning of next year, not to wait till February. Alright, so ChainLink, another one that got into, or just got into accumulation, which may or may not be a good sign. It is a good sign because maybe more people are buying in or supporting it, and it may bottom at a higher level, meaning the accumulation starts at a high level compared to the previous hibernation period back in 2002-2003. the not so good thing would be maybe we have to wait for a little longer if it really comes back down to that similar level. So, thanks for joining me. See you in the next session.